We're live. Awesome. Perfect. All right, guys, just testing something out here. Want to do a quick pre-market report on the futures, SPY, ES being SPY futures, going to do NQ, which is technology futures for NASDAQ. Just want to dive through some key components to the upside and downside to keep an eye on as we head into the trading session today. It is 9:13. Going to try to keep this short and sweet. And hopefully get some feedback from you guys. See if you guys like this kind of content. Trying something new here this morning. So I have the ES chart up here. So this is going to be SPY futures. And the moving averages and everything are going to be the same. It's just that the prices are different, right? So ES is the SPY future that's traded 24/7 basically. And SPY is the stock market version, which is only traded from open to close, pre-market and after hours, right? So just slightly different in terms of prices, but basically the same commodity. So we're looking at SPY here, ES, and if we're seeing today's session as we head into open, more or less the same action we've been getting lately, right? We're looking at what is the upside, right? What is our upside potential when we're looking at SPY and the overall macro market today? We need to reclaim this 20-day moving average, right? If you go ahead and you look back at basically the past couple weeks of trading, and you look back to when we crossed below the 20-day, the last time that we did. If you guys are noticing here, if you go back to September 14th, pretty much exactly a month ago, ever since we crossed below the 20-day, we have not been able to reclaim it. And as a result, we have been overall trending lower. Okay, even when we use the 100-day as support and we bounce, we still cannot reclaim that 20-day moving average. And we can't even reclaim the 50. We did it for a day or two and then fell right back below it. And so you're starting to see this pattern form here where you have, we can actually draw this out here. You pretty much have linear support and falling resistance, right? And it looks like we're ready to squeeze here. And you see the volume is dropping on the futures contracts. And really what's going on here is the market is waiting for a catalyst. Okay, we're waiting for some kind of big headline that is going to kind of give us the fire that we need to either make a move for our next leg down and break below this linear resistance on the 100-day, or go ahead and be able to break through that 50-day and 20-day. And so right now, with the lower volume, with the lack of a catalyst, we're waiting on the sentiment from the bank earnings. I think JP Morgan reported earlier this morning, and we can certainly take a look at them and see what's going on with JPM. So I'm curious what they're doing following that report. They reported pretty early this morning. Doesn't look like too much action going on. Looks like maybe a bit of a drop, but nothing crazy. Not a lot of volatility there. About a $2 drop. So certainly does not appear that it was a positive report. And so if we go back to ES, right, we have that dropping support. And so this is not to say that we are bearish, and this is not to say that we are bullish. That's not what I wanted to talk about today, guys. What I wanted to talk about is the lack of opportunity in the market right now, right? So if you go back to, a couple weeks ago where we had aggressive sell-off, we crossed below that 50-day, boom, we started hitting the downside, right? Some very great short opportunities in the market. And then we come down to this 100-day moving average and we use it as very, very hard support, right? We bounce off it very aggressively right back up to the 20. Very great dip buy opportunity. Okay, again, we reject the 20, we fall below the 50, great short opportunity. Now, where are we at? Okay, you have to look at things in terms of windows of price action. How much, what is the size of our window of opportunity? And so I'm looking at ES right now, and you guys can just see by the size of these candles, pretty much for the past 4 sessions, not a lot of size, right? We can see the volume is dropping. If we look at our volume with the volume moving average down here, we're seeing uncertainty, right? We're seeing sideways movement, not a lot of conviction one way or the other, okay? The bulls don't have the strength. And this, guys, by the way, this is a great way, I think this is an important lesson to go over with you guys. When you're seeing that the volume MA, when you're seeing that the supply, right, so our 50-day and our 20-day, the bulls, they don't have the strength to push through it. So we're not seeing a lot of strength from the bulls. But at the same time, we are defending our 100-day, right? Got a little bit shaky here. But we didn't really make that push for that next leg down to the 200-day like we talked about 2 weeks ago, right? How there was potentially an opportunity down to the 200-day. Well, the bulls defended the 100-day, and the bears defended the 50-day. So what does that tell us? Right? Just like I've been talking about this entire live session, it tells us that there is not conviction in one direction right now. Okay, of course we had our initial drop off of fears of the Delta variant, how it's going to affect the economy, obviously what's going on in Congress and the debt ceiling crisis, and then you have inflation concerns. And so I think we're just waiting for one of those storylines to play out, and then we could start to see some movement. So really, main point that I want everyone to take away from this is that, the window of opportunity right now is not the strongest. Okay, this is not a time to go crazy. So when is the time to go crazy? When can we start hitting the market with conviction and get back to trading, a normal trend, right? Because a trending market is much easier to trade when you see we're in an overall uptrend. You wait for pullbacks, you wait for the break of the highs, and you capitalize. Same thing with the downside. You wait for the break of the lows, you wait for it to trade up into resistance, and you hit the downside. Okay, but this is if we go ahead and we move the screen over and we get rid of all that and you just look at this. Okay, this is a very channel-driven market. There's a lot of pinball action going on between this channel here. So what we have to do, we have to pick our battles. We have to find areas of relative strength and weakness to capitalize. And then once we start to build above this 50-day moving average, once we start to build below this 100-day moving average and breaking the lows and breaking the highs of this channel, now we can feel strong about hitting with conviction either the upside or downside. Right now, I don't feel a lot of conviction, certainly in the medium and long term. In the short term, I'm just taking day trade opportunities off of the 60-minute chart. If we go to the 60-minute on ES, I'm looking for for us to trade up into supply and hit the downside. I'm looking for us to break below the lows for a next leg down, right? But I'm also keeping an eye on that 100-day support because I know we're using it as very strong support. The bulls are not willing to give up the 100-day right now. And that could all change during this session. That's just based on the data we have right now. That's kind of what the market is telling us. And certainly we can trade pops above the 50-day up to the 100-day and maybe a small break above the highs. But again, we have to keep in mind where is that 50-day moving average on the daily chart. And let's make sure we're not going long right here, at least until we build comfortably above it and we feel confident that it's not going to be a fake out, right? We're not going to just spike slightly above it before the bears come in and smack it back down to the 100. We don't want to get caught in this trap where we're trading this pinball action and we're going long at the top, it reverses, we're going short at the bottom, it bounces, right? That's the last thing we want to do. We definitely want to avoid getting into a situation like that. And so let's just round it out by going over NQ real quick. Ticker for this would be QQQ, the NASDAQ futures. More or less the same thing, right? Certainly a little more conviction to the downside. We're seeing a little more push, a little stronger of a push below the 100-day. Obviously with the bond yields, you're seeing more relative strength, or relative weakness rather, in technology compared to the S&P. And so if the overall market gets weak, this is where I really want to target NQ or QQQ, or look for an individual stock with relative weakness in the technology sector. I really like a break below these lows here, 14,579 on NQ. Even if we can cross below the 20-day, looking at the 60-minute chart here, if we can cross below the 20-day, it looks like there's even opportunity to get in early on it and ride some shorts down to that 579, 581 area. Certainly the break below 654 could give us that push. So we could probably get about a 50, 60 point push down to those lows before we test them, and then from there decide if we want to double down or take profit and start to scale out of the position. Either way, I certainly like the opportunity there, just because when I'm looking at this chart over the past 5-6 trading sessions, we're hitting our head on resistance, trending lower, hitting our head on resistance, trending lower, hitting our head, trending lower, right? And so you see this pattern forming where We hit the upper linear regression bands. We hit the 50-day. We hit the 50-day. Now we're trading at a point where the 200-day is actually crossing above the 50-day, right? It's kind of getting this back and forth cross here. And really what that's telling us is that the long term is actually outpacing the short term, which is just another bearish indicator. And so that's just something to keep an eye on. If the 200-day keeps on building above the 50-day and the 50-day drops lower, 200-day outpaces it or starts to flatten out and get more linear, then we're going to start to keep an eye on, okay, yeah, we're hitting resistance here. That's our confirmation that we're probably not going to come up to this 100-day test. Or even if we do come up to the 100-day test, what do we do there, right? Do we go ahead and we break above these highs here and build higher? Maybe, certainly possible. Nothing is impossible, but it seems based on this current pattern that's been playing out since the October 7th trading session, so going back 5 sessions, certainly seems more probable that we are entering an area of weakness in this area here, where there's just not going to be a lot of desire from the bulls to buy at this price. Probably going to see the sellers drag us down, and then like I said, just wait for that cross below the 20, and let's see if we start to get a similar pattern that we have on the SPY daily, right? Do we defend this linear support with falling resistance? This is one of my favorite patterns, by the way, guys. If you can't tell by now, I really love this pattern. And the inverse holds true for the upside, right? When you have, let's say you have linear resistance and rising support, it's a very great bullish setup. And this, the inverse of that pattern to the downside, I love that setup as well. And so I'm keeping a close eye on what do we do with this linear support and falling resistance, right? Kind of getting that same pattern we're getting on SPY futures on the daily, where it looks like we're going to squeeze one way or the other here. Let's keep an eye on that and look to capitalize. All right, that's going to do it for me this morning, guys. Obviously, I don't think anyone joined in. I didn't even send a link out. I just wanted to get this done and get it out there to get some feedback from you guys. So hopefully it goes well, and then we'll start doing this more often.